Welcome back then. Well, the markets have moved to the high point of the day and it's a really strong showing because when you open up with a gain of around 190 points and you hold on to those gains, well, that's telling you the kind of mood that we are in terms of the markets. Well, one company that delivered a rather good set of numbers was KC International. Now, the stock is in focus on the back of their strong earnings. It's been a rather very good showing. In fact, I think we have the management with us. I think we'll just get him in just a bit. All right. Yeah, I think Mr. Agarwal is with us. Hi, Mr. Agarwal. Thanks so much, sir, for joining in. Congratulations on a good showing. 16% growth in terms of revenues. No one on the street was factoring in this sort of a number, and you have made up for the first quarter as well. Now, at the halfway mark, you've done roughly around 4.5% in terms of a revenue growth. I remember pre-COVID, you all were guiding for 10 to 15%. Are you going with that number now? 10 to 15% growth for FY21?
So thank you, Mangalam, and good afternoon. So actually, we have not given any sort of a guidance for this year because of the obvious reason, COVID. We don't know how it will pan out for the rest of the year and in different parts of the globe. But yes, this is what we have been thinking that there will be a decent growth and a decent numbers we will be able to post. So as you rightly said that we have been able to ramp up our execution on all the projects very effectively in Q2, and the overall numbers for the first half there is a growth of almost close to 5%. So this quarter has really
Mr. Agarwal, when I asked you that question, I meant pre-COVID you were guiding for 10 to 15%. Now the very fact that you're growing 16% in a single quarter, we want to understand, and the stock market also wants to understand, and all our viewers would like to know whether or not you can guide for double-digit revenue growth for this year. Tell us.
See, as I said, that as a policy, we are not really guiding on the numbers for this year, but certainly, going by the execution that we have delivered in the Q2, we do expect that we should be able to post a decent set of numbers for the year as a whole.
All right, get that point, Mr. Agarwal. This is Mangalam here. Nigel is my colleague asking you the questions as far as the growth is concerned. But the other thing that I want to know is that the first half so far, you have an order intake of close to around 4,000 odd crores. What's your outlook for order intake for the remainder of this year? Your L1 in close to 3,000 crore worth orders?
That's correct. So we are L1 in close to 3,000 crore worth of projects. And the good part of the order intake has been that of the 4,500 crore order intake which we have done in the first half, 80% of the orders are coming from the T&D vertical, which is the largest vertical of the company and which is more profitable compared to the other verticals. And for the year as a whole, we do expect that we should be able to do better than last year. Last year we did the order intake of close to 12,000 crore. This year, we do expect that we should be able to do 14 to 15,000 crore of order intake.
Okay, all right. So you're sounding rather confident then. That's the good news. The only part, I think, Mr. Agarwal, in your numbers was the margins. You could attribute it that commodity prices had moved up. But now I track the steel prices very closely and they've moved up even more post-October. So what sort of a margin number are you looking at going ahead? Can you pass on all this input cost spike to the end users?
See, it depends on the contract to contract. Most of the contracts in India, let's say, and especially in the railway business and the civil business, we do have the price variation clause where we will be able to pass on some of the impact on the increase in the commodity prices to the customer. But what happens, especially in the international market where we are doing large part of the T&D business, these are the firm price contracts. So we will not be able to really pass on the impact of these commodity prices. Okay. But we do expect that with the larger execution and generally the execution ramps up further in Q3 and Q4 with the larger revenue coming up in the H2. We will be able to, let's say, absorb those commodity price impact.
Give us a number, sir. Give us a number. You have done margins of around 9% in the past quarter. You could give us a range. You expect things to improve to around 10%. That's what you have normally been doing.
That is what we do expect, that we should be able to do, better than 9% in H2. Certainly, we will be closer to 10%. Yeah.
Okay, we take that point. Mr. Agarwal, if you could give us a sense on your receivable days, because close to around 5,000 crore worth trade receivables sit on your balance sheet, 132 days in terms of net working capital. Is that likely to improve?
Certainly, Niger, it is likely to improve, and we are actually in fact, on the working capital piece, I would like to mention, to all your viewers that we have done, very good in terms of the collection from our customers. Wherein our collection in the first half were more or less in line with what we did in the last financial year.
So by the end of the day, what's the number of working capital days are you looking at?
Currently, we are operating at about 130 odd days. So we do expect that we should be closer to about 110 days or so by the end of the financial year.
Very quickly, tell us railway revenues for this year and also civil revenues for this year. What is the guidance? Two numbers.
So they are, really doing very well. In fact, the first half, the entire growth has come basically from the railway business and the civil vertical.
Yes.
And, we do expect that both these vertical will continue to do well, back of the good order intake. So our expectation is that railway should do closer to about, 3,500 crore or so.
Okay.
The civil business should be doing maybe, 1,200 to 1,300 crore for the year as well.
All right. Good chatting with you, Mr. Agarwal. Thanks so much for joining in. You've given us some big numbers, hoping that you achieve it in the second half of this year. Well, on that note, though, we'll slip into a short break. On the other side, Manisha Gupta will be joining in to give us a sense of what's going on.